Imagine waking up tomorrow and the world's most powerful financial weapon is just paper. Not burned, not banned, just ignored. Oil traders don't want it. Foreign governments don't hoard it. Global banks stop settling in it. The US dollar, the thing printed in massive quantities every year, suddenly becomes what every other currency is: local. That sounds impossible. It isn't. And to understand why the dollar runs the world and what happens if it stops, we have to rewind to a moment when the United States was the only major economy left standing. Europe was rubble. Asia was devastated. America had factories, gold, and leverage. So world leaders gathered in a small town called Bretton Woods and quietly redesigned global money. Here was the deal. The US dollar would be tied to gold, and every other currency would be tied to the dollar. It was simple. If you trusted the dollar, you trusted the system. And the United States promised something extraordinary. Any foreign government could exchange dollars for gold at $35 an ounce. That promise made the dollar more than a currency. It made it the anchor of global trade. Fast forward to 1971. The math stopped working. The U.S. had printed far more dollars than it had gold to back them. Foreign governments started asking for their gold. President Richard Nixon made a decision that changed everything. He closed the gold window. No more gold, no more conversion. The dollar became paper backed by trust. Now here's the strange part. Instead of collapsing, the dollar became even more powerful. Why? Because of oil. In the 1970s, the United States struck a quiet deal with Saudi Arabia. Oil, the most important commodity in the world, would be priced and sold only in dollars. If you wanted energy, you needed dollars. If you needed dollars, you had to trade with America or hold American assets. That created permanent demand, and demand creates power. Today, nearly 60% of global foreign exchange reserves are held in US dollars. Most international trade is invoiced in dollars. Even countries that dislike US politics still settle transactions in its currency. It's a little ironic. Nations argue with Washington in public and buy US Treasury bonds in private, because the dollar isn't dominant by accident. It's dominant because it sits at the center of a network. Global banks clear payments in dollars. Commodities are priced in dollars. Debt around the world is issued in dollars. It's not just money, it's plumbing. And once the plumbing is installed everywhere, replacing it is painful. Now let's simplify how this system really works. When the United States runs trade deficits, meaning it imports more than it exports, dollars flow out to other countries. Those countries usually don't spend all those dollars on American products. Instead, they recycle them. They buy U.S. Treasury bonds. They buy American stocks. They park their wealth in dollar assets. This creates a strange loop. America buys goods with dollars it prints. The world sends those dollars back to fund American debt. The U.S. government borrows at relatively low interest rates because global demand stays high. It sounds almost unfair, and in some ways it is. This is called the exorbitant privilege. The United States can borrow in its own currency at massive scale, without facing the same constraints other countries do. If a developing nation prints too much money, its currency collapses. If the U.S. prints too much money, the rest of the world absorbs part of it. At least, for for now. Because here's the uncomfortable math. The entire system runs on confidence. Confidence that U.S. institutions are stable. Confidence that U.S. debt will be honored. Confidence that the dollar will hold purchasing power over time. But U.S. debt has passed $30 trillion. Deficits are persistent. Political gridlock is routine. And rivals are watching. China has been pushing for more trade in yuan. Russia has tried settling energy deals outside the dollar system. Some countries are experimenting with alternative payment networks. Every few months, someone declares the dollar is finished. So let's separate hype from reality. Replacing the dollar isn't just about choosing a new currency. It's about replacing the entire financial ecosystem built around it. To dethrone the dollar, another currency would need a massive open bond market, deep liquidity, strong rule of law, global trust, military and geopolitical backing. Right now, no other country checks all those boxes. The euro has size, but fragmented politics. China has economic weight, but strict capital controls. Gold is stable, but impractical for modern trade. And digital currencies? They're volatile and far from replacing sovereign monetary systems. So in the short term, the dollar's position looks secure. But dominance doesn't have to collapse overnight to weaken. It can erode slowly. Less trade in dollars here, a few more bilateral deals there, gradual diversification of reserves. If central banks reduce dollar holdings from 60% to 50% over a decade, that's not dramatic, but it matters, because the privilege shrinks. And if global demand for U.S. debt falls, interest rates rise. Higher interest rates mean higher government expenses, which means more debt, which means more pressure. That loop can tighten. And here's where it hits everyday life. If the dollar loses its special status, Americans would feel it. Imports become more expensive. Interest rates climb. The government can't finance deficits as easily. Inflation risks rise. The U.S. standard of living has quietly benefited from global dollar demand for decades. Take that away, and adjustments follow. But here's the twist most people miss. The dollar doesn't need to disappear for the world to change. All it takes is reduced trust. Financial systems are psychological. They work because we believe they work. And once belief cracks, shifts can accelerate. Not instantly, but faster than expected. The British pound once ruled global trade. It lost dominance gradually after 2 world wars drained Britain's finances. It didn't vanish, it just stopped being the center. History doesn't repeat perfectly, but it rhymes. So the real question isn't, will the dollar collapse tomorrow? It's this: can the United States maintain the political stability, fiscal discipline, and institutional credibility required to justify its privilege? Because the dollar's power isn't just about economics, it's about trust in the American system itself. And trust is harder to print than money. For now, the world still runs in dollars. Oil trades in dollars. Debt settles in dollars. Reserves sit in dollars. But every empire of money looks permanent, right until it doesn't. And if the day ever comes when countries no longer need the dollar to trade, borrow, or store value, the United States won't just lose a currency advantage. It will lose the invisible subsidy that has shaped its economic reality for half a century. The dollar runs the world. The question is, for how long?